Good morning, guys. Things are happening kind of as we expect. Not much unexpected, I guess, overnight or on Monday. Now that the US has done a deal, the stocks are bullish, but how much upside can there be with interest rates still heading higher? And as you can see here, the commodity pitch is still weakening, which would suggest that global growth is going to struggle. And we can see the Bloomberg index here. It is coming off. We've got copper coming off, natural gas struggling, oil getting smashed, gold up, but wheat and coal breaking through to pretty terrible territory. So that's not going so well for the Aussie, as you would imagine, being a commodity currency. Um, Dollar yen has been on track for a good run, but needs to retrace, as we discussed. We're looking for it to come back to this previous resistance level, which is now support, and that seems to be on track to be happening. Dollar index itself also has had a pretty good run for almost 2 weeks, and then it's just chopped sideways as it's sort of there's a bit of a battle there between working out that getting the heat out of the system while still maybe searching for some safety. Uh, that's why we can see there's gold up because stocks rolled over last night. Yes, they had a good day running into Friday as the expectations of a deal was getting closer. And then since then, it's been sideways to weaker for US stocks, despite big tech trying to hold the market up. Everything else slid. And just have a quick look at VIX coming off. They don't seem to care about it. The options traders are not locking in price just yet. But if we look at the S&P, it's had a reasonable rally, but it's sort of sitting on this resistance level. It's broken through that 42, might lean on that. It's a long way to go back to the highs. Um, it's that wall of worry that we're at. For those of you who don't know what I'm talking about, um, I'll try and find the wall of worry for you. So I'm just going to pause this. I'll come back when I've found it. Okay, so I found it. So this is the denial, right? One could look at it that we're in this wall of worry here, um, getting to that anxiety. So if you look at this, and this is The Nature of Risk by Justin Mamis, very good book. It's particularly the stock markets, but if we look at that chart as compared to this chart, um, you know, where this section here that we're going through could be this part, yeah. So there might be a dip into. There's an old saying: "Selling may go away as they go into the U.S. summer." And it might dip down lower into August and September, and then you get that you get that Christmas rally through to the US winter. So selling may go away, might be keeping a lid on this, and we'll have that sort of aversion before we come back up and test it again. So that's maybe how the stock market's going to play out. It'll obviously depend on a lot around US interest rates, which are looking to go higher as well. Anyway, so that's where we're at really. I shall see. We've got bonds just ticking off a little, interest rates just ticking off a little, but they still expected to go higher with maybe not a rise in in June, but because they're looking for that pause. But certainly July is, I think now 70 or 80% chance of a rate rise in July. So it will happen. But yeah, that's it. We'll be try and come back tomorrow. Cheers, guys.